Guys, I'm going to be talking about liquidity on today's video. So let's talk about liquidity. Liquidity means money, simply means money. Okay, there are different types of liquidity in the market. There are different, not really different types, areas we can spot liquidity in the market. Now, you should understand that areas where you find liquidity attract a lot of traders, not just buyers. It attracts buyers, sellers. It attracts market activities. So an area with liquidity is an area where everyone is likely interested to. Liquidity spotted for spots highs and lows. Now, not all highs and lows are the same. Okay, this is a high, this is a high, this is a high, this is a high. They are okay. This is a high. Now, not all of them are the same. This is a low, this is a low, this is a low. They are different. Now, some might be what key levels high, some importance levels high. Now, some might be resistance and some might be support. Okay, so now this is a high. Now, when we have another high rejecting from here, this is now a resistance level. Okay, this is a high still, but it is also a resistance, okay, in the market. Now this is a low. Okay, then when we have another low, it becomes what's a support. Now this is what's a support. Okay, now this is a support and this is a resistance, but they are still what highs and lows. Now liquidity can be spotted above what this level, above this level. Why? Because we have traders. There are two things that can happen at a high. Okay, there are two things. What we have traders who are shorting the markets here, and we have traders who choose to long the markets at this point. We call them breakout traders. Now, these are two case scenarios that you can see in rewards in a high. That is the new sellers that are trying to short the market. That is, they feel like, okay, if markets come here, since this is a resistance, market is going to reverse. And we have people who just believe now that as the market is coming back to this level, it's likely going to break and keep moving forward. So they just feel like, okay, the market is going to break and don't want to miss the break. So they are not even waiting for a retest. They are just buying on what's hoping that the momentum will be strong enough to break this high and the markets will keep going forward. Or maybe they have a news or something. So now we have the sellers who have their stop loss here. Now, how many market activities happening at this current price? We have what? The sellers, buyers, and we have now if the price goes above this level, people that sold here, their stop loss will likely be triggered, or maybe the previous sellers that were here that were already selling, okay, their stop loss is likely going to be triggered and they will be forced out of a market. Now, the market can do like this, whereby it forces buyers and sellers out at the same time. Now, we have sellers at this point, right? Somebody sold here and his stop loss is here. So the market went above and what came back below. So now this person that sold here, he was forced out of the market. Okay, the market took his stop loss. That's market taking liquidity. And the people that bought here, now they are on their water. Their trade is what's in a loss. So they are likely going to close their buy position, which is going to fuel more move to the downside. Now, I want you to understand something. When you close the buy position, you are closing it with a sell order. So now when this buy position are closing their trade because they are currently in a loss, they are closing their buy trade with a sell trade, which is fueling the move to the downside. That's why at times you see sharp rejection at highs or lows. Now, highs and lows can be of different time. Highs and lows can be of support or resistance. Now we can have highs and lows at what key levels also. Key levels when I mean previous day highs. So let me just quickly bring up the indicator. And this is an indicator that shows you previous day high. Okay, you can see now Saturday's high. Market took it and the market sold for a while, and this is Sunday currently. Now what happened? So markets what this is Monday morning, and market took Sunday's high and we're seeing rejection so far. So maybe the move might continue down below. So now we have previous day high and low. Now these are the previous day highs and low. Okay, they are also what's good levels of liquidity because traders set their stop loss at the previous day high or the previous day low. Now, just imagine I was trading on Sunday and I'll be like, okay, I want to take a sleep now. I want to go to sleep. I'll just be like, let me set my stop loss below this level. Maybe I'm buying the markets. Let me just set my stop loss somewhere below here. I'll set my stop loss and I'll just go take a nap or wait for the next trading day to open. Now, not all previous day highs and lows are areas to buy. Not all highs and lows are tradable. Now, there are some certain factors I used to pick mine out. Okay, I want to pick this stuff not just randomly. I use order flow for confirmation, which I'll be talking about on another video. But for now, I just want you to know that, okay, areas where you can spot liquidity, not all of them are tradable. Okay, because this is a high doesn't mean it is tradable. You have to know if it is tradable. You have to understand the market pattern. You have to understand a whole lot. Okay, so I'm just talking about highs and lows. I'm trying to keep it simple here. I'm not trying to combine the whole thing on how to trade. Now, another areas where you can spot high liquidity is what price on previous day highs and lows. We have round numbers. When I mean round numbers, I'm talking about numbers like this. Now, this is an indicator, round numbers. So I set it to give to draw a line at every 5,000 intervals. You can set yours at 1,000, but I'm just setting mine at 5,000. So for every 5,000 difference, it's going to draw a line. That is for 10k, 20k, 15k, 20k, 25k, 40k, 45, 60k, 65k. It's going to like mark a level on the chart. Now we could see this reaction on this level. Now these levels are usually psychological level. Now I'm like 60k, it's a round number level, which is more like a psychological level. So when the market is coming to 60k for the first time in a while, we're going to expect some certain reaction. Now let's just assume that Bitcoin goes back to the all-time high of like 100k. Now as soon as Bitcoin goes to 100k, we're likely going to see reaction for the first time. That is, maybe traders are trying to buy more Bitcoin, or they are trying to take profit on their Bitcoin positions now. So you usually spot liquidity at what? One numbers. Okay, liquidity. One numbers liquidity. Now, let me talk about others. Another type of liquidity. Now we have internal and external liquidity. Two types of liquidity. Now we have internal and external liquidity. Now this is a high. Then we have something like this. Okay. Now we have something like this. This is price. Now this level is what's the external level. Now all these, this is a high now, but this is an external high. All these are what? Series of internal highs. All these are what? Series of these. They are also highs, but like they are internal highs. Now another area of good liquidity is what? Internal what? Highs. Internal highs. Now this is, yes, this is a high, but usually the playbook we see in the market is markets coming back, taking this series of liquidities, taking this. Now some people might be expecting the market to come all the way here before selling, but most times it's just what? 1, 2, 3, then it what? Rejects when there's a gap in price. Now I'll show you, I'll try to show you some price examples. Okay, let's see if we can. Okay, let's just use this. Let's turn this off. Let's turn this off. Okay. Let's do this. Now this, let's just mark this as an external high, this particular level. Now we have this is a high. Now we have this high too. Sorry, the wrong sold. Okay, this is a high. And this is also a high. Okay, this is a high too. Yes. Now what happened here? You could see what the market was took this high and this high. It failed to reach this point, the ultimate high at this level. It took this high to internal high, then it sold. Okay, so there's no guarantee that you're expecting the market to get all the way to this point before selling. So the market might just take 1 or 2 highs, series of what's internal highs. So whenever market take at least 1, 2 or 2 highs in a row, you are expecting maybe reaction in the markets. These are what series of internal highs. Now basically, let's see if I can get a good example for low. I'm not sure I can, but okay, let's use this. Now this is a low, right? Series of internal lows, and this is a low too, and this is the external low, and this is the internal low. Okay, now internal liquidity, basically let's just say external liquidity, internal liquidity. Now what happened? Market just came, what took this was internal liquidity, and it was spots back for a while. So now there's series of internal highs or series of internal liquidity. So it can come at highs and it can come as what those external and internal what liquidity. So liquidity as a concept is not too hard. We can also have previous week highs or lows, and there's the last one, which is sessions. We can also have sessions highs or lows. Let me just see if we can. Yes, we also have session highs or lows. Now there are some sessions whereby markets will take the low of a session and it's a buy good. Now this case happened on Tuesday. See market taking London low and Asia low, and what's New York. After New York took these lows, it's bought hard. It's cases like this happens at times. Now you can see Wednesday market took London low and what's it's bought shortly. So you can see market took this close session low and bought doing Asian session. You can see this market took London low and it's bought. Now sessions lows and sessions highs are also good spot of what liquidity in the market. You could see this. Now not all of them are the same. The indicator I'm using is market sessions by Leviathan, and these are my session settings. I think yeah, my sessions are custom sessions. I kind of got it from, that's a long process. I've talked about that on another video. So these are just examples of liquidities where you can spot liquidity. Remember, not all are tradable. I'll be dropping more videos for you to know how to use liquidity in your own trading, but I'm just teaching you how to spot liquidity and the different types of liquidity we have in the market. So that will be all for now. See you in the next video.